Welcome back. I hope everyone had a safe and happy holidays. This is the Finance News Network's first morning report of 2023. US stocks advanced on Friday after the December jobs report and an economic activity survey showed signs that inflation may be cooling, signalling that the Federal Reserve's interest rate hikes are showing their intended effect. The Dow Jones Industrial Average increased 2.13%, the S&P 500 ended up 2.28% higher, whilst the Nasdaq Composite added 2.6%. It was the best day for the Dow Jones and S&P 500 since November 30th, and the best for the Nasdaq Composite since December 29th. Every Dow Jones component ended higher on Friday. Friday's rally helped stocks end in positive territory for the week, which was the first of the year. The Dow Jones and S&P 500 each closed the week 1.5% higher, whilst the Nasdaq advanced 1%. The December non-farm payroll report showed that the US economy added 223,000 jobs last month, slightly higher than the expected 200,000 jobs economists polled by the Dow Jones expected. In addition, wages grew slower than anticipated, increasing 0.3% on the month, where economists expected 0.4%. All investors care about is the data suggests inflation is moving towards the Fed's target. That's all investors care about, and average hourly earnings suggest inflation continues to slow. They are excited about that, said Michael Arone, Chief Investment Strategist at State Street Global Advisors. Stocks rose again where the ISM's non-manufacturing purchase managers index showed that the services industry contracted in December, a sign that the Fed's rate hikes may be working to slow the economy. Across the S&P 500, all sectors closed higher. Materials, information technology, and real estate led the day, closing 3.4%, 3%, and 2.9% higher, respectively. In the upcoming news this week, the US stock market faces its next big test with the kickoff of corporate earnings season. Analysts expect companies in the S&P 500 to report their first year-over-year decline in quarterly earnings since the height of the COVID-19 pandemic in 2020, according to FactSet. Fourth quarter profits are projected to have dropped 4.1%, a sharp reversal from more than 31% growth lodged a year earlier. Companies have been battling a host of challenges, including persistently elevated costs, rising interest rates, and a once-in-a-generation surge in the dollar. And while analysts have been trimming their earnings expectations, investors are looking to this next round of reports for insights into the resilience of corporate profits and the outlook for stocks. Investors will review quarterly results this week from some of the country's biggest banks, including JP Morgan Chase & Co. and Bank of America, as well as companies such as Delta Airlines and United Health Group. They also will pass the latest consumer price reading, which is likely to influence the pace of Federal Reserve's campaign to raise interest rates. The SPY futures are pointing to a 1.5% rise. Thank you for listening. Hope you have a great day.